world works however it works. Your job and the job of every bull market is to throw you off. Your job is to not part with your tokens. I've explained this many, many times. That is your single job. Keep hold of your tokens, and then eventually the banana zone comes and we can realize some of our hopes and dreams. Now, obviously, there is a risk that may not happen. I don't see it in all of the macro work. I don't sell anything in crypto. I've not sold anything, meaning my overall portfolio at all since 2020. And I just continue to compound and add, and that's worked for me really, really well. For those of you who keep asking, no, my allocation hasn't changed. It remains that my core portfolio is in Solana. I have some memes. I have WIF, Bonk, some Doge. And if those go up and down 80%, it doesn't matter to me. It's fun. I actually think they'll do well. You may have a different token. They're not my recommendations. I'm not trying to shill you into buying anything like that. If you just want to stick with Bitcoin, it's fine. Ethereum has been a hairy ride. Now, part of what's been going on is jump trading have been dealing with legal suits with the SEC, CFTC, and others.
Raoul Pal has moved away from Bitcoin and other altcoins, reallocating 90% of his liquid assets to Solana. The move highlights a broader trend, where investors seek assets with high growth potential and a good user experience. 90% of his liquid network is essentially allocated to Solana right now. He doesn't hold much Bitcoin at the moment. This isn't to say he doesn't like Bitcoin. He thinks others are going higher. It's that simple. Solana's impressive performance in the market supports Paul's bullish outlook. Since the beginning of the year, Solana is up roughly 75%, outperforming Bitcoin and Ethereum, which posted gains of 58% and 42%, respectively. Paul's strategic shift comes at a crucial time when the cryptocurrency markets are preparing for a new phase. Moreover, the excitement around Solana has been amplified by the recent backing of Franklin Templeton, a global asset management giant with over $1.64 trillion under management. The company's interest in Solana is fueling speculation about a potential cash exchange traded fund, ETF. Such a development could impact Solana's price, as ETFs provide institutional investors with a regulated route to gain exposure to cryptocurrencies. According to Raoul Pal, this crash is a great chance to make millions with Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
So Boring Zone 2012, 27%. Boring Zone 2016, 38%. Boring Zone 2020, 20%. Boring Zone 2024, 27%. Right. So it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it because you're getting caught up in short-term time horizons of traders on Twitter. That's their time horizon. Nothing wrong with being a trader. I just don't think you'll make as much money. So I think you're better off to think of the long-term gain is how do I use these kind of opportunities to put as much money in as possible so I can capture the big upside when it comes. And I've shown you why that's not just a hunch based on these charts. It's actually based on the everything cycle. And that this macro spasm is actually the opportunity to really think about this, how you want to get involved, where you can find money to add, how you can get your portfolio set. It applies to tech stocks. It applies to equities overall. It applies to emerging markets. All of these things are setting up perfectly, even to commodity manufacturers, mining companies, any of these things.
Paul shared his take on the market's trajectory, focusing specifically on Bitcoin and Solana. Paul identifies a specific pattern on the charts of both cryptocurrencies resembling a bullish flag formation and predicts the emergence of what he calls the banana zone. This phase is expected to be marked by heightened market activity and substantial growth, which could extend into 2025, particularly during the summer and fall. Paul explains that the banana zone signifies a period of intense excitement in the market, similar to the last days of spring, before moving into a phase of exuberance. During this period, altcoins typically see significant increases, with Ethereum likely to outperform Bitcoin. He singles out Solana in particular, predicting that it will outperform both Bitcoin and Ethereum. In his analysis, Paul emphasizes the importance of evaluating projects based on real traction and network effects, rather than getting carried away by hype. Paul warns investors of the dangers of excessive leverage and predicts some notable corrections amid the overall banana zone market euphoria. As the market heads into the summer season, Paul advises patience and rationality. He warns of the risks of irrational exuberance and the temptation to invest in unproven narratives. Raoul Pal's latest analysis suggests that Bitcoin and Solana are about to enter a very active and potentially lucrative phase known as the banana zone. He urges investors to be cautious, emphasizing the importance of thoroughly evaluating projects and warning of the dangers of excessive leverage. As the market prepares for this anticipated period of growth, Paul's advice underscores the need for a balanced and informed approach to navigating the cryptocurrency landscape. Solana has showed remarkable resilience in the face of recent market turmoil, staging a significant recovery after a sharp drop. The fifth largest cryptocurrency by market cap has rebounded from its recent low near $110, marking a dramatic turnaround that has caught the attention of market participants. With Solana showing a strong lead and dethroning other altcoins, Solana's price action suggests a delicate balance between bullish momentum and persistent bearish pressure. The token's recent performance has been impressive, with a 10% surge catapulting it to the fifth position in terms of trading volume. This surge comes after a severe correction that saw Solana lose over 50% of its value in less than a week. However, the current market structure indicates a potential shift in sentiment, with selling volume clearly declining. Technical indicators offer deeper insight into Solana's potential trajectory. The Directional Movement Index DMI is showing signs of an impending bullish crossover, with positive and negative directional indicators diverging. Complementary, the Moving Average Convergence Divergence MACD histogram shows a decrease in selling pressure, which could provide bulls with a solid base for a sustained up move. Solana price has now broken out of the mid-range of its descending parallel channel, a development that opens up the possibility of testing higher resistance levels. Paul combines fundamental and technical analysis with an understanding of the business cycle, saying, if you can't formulate your investment thesis in one sentence, it's already too complicated, and if you can't explain it to your mate down the pub, you're not going to make money. According to Paul, in 2008, interest rates fell to zero, government celebrated a debt jubilee. It was an election cycle in which Obama defeated McCain, and politicians handed out stimulus like candy to voters. Paul says these events are mirrored roughly every 4 years in a cycle he calls the everything code. Tech stocks will outperform, but everyone is wrong in this market. They don't see how we can relive 2008 once we get the money printer. He believes it's all determined by liquidity, stating, once liquidity changes, everything changes. Paul disagrees, saying the basket of tech stocks can't collapse because of anticipated future liquidity. Its stimulative effect on asset prices and data of extreme accuracy. Money will need to be printed to pay off the debt because the U.S. already accounts for 124.6% of GDP, meaning it's borrowing more than it's creating productivity. When the money printer turns on, asset prices skyrocket. Interest rates could possibly be significantly lower than 5.5% since there's a $34 trillion national debt to pay off. They'd be paying $1.8 trillion a year in interest alone, so it almost has to come down.